Hello and welcome to this afternoon's roundtable, Leading from Strategy to Execution. I'm Jeff Kanige, Editor-in-Chief of The Deal, and for the next hour or so, we're going to explore the challenges corporate development teams face in this volatile market. We'll look at some of the tactics you can use to meet the demands for growth that can bedevil even strong, well-established companies. Joining me for this discussion are three guests with a wealth of experience in formulating and carrying out strategic mandates. Derek York is Director of Strategic Investments and M&A at Caterpillar. Jeff Green serves as Global Transactions Leader for Life Sciences and EY's Transaction Advisory Services team. And Denise Brower is Vice President of Corporate Development at ITT. Thank you all for being here.
Thank you.
And if we've got time, we'll answer your questions too, so be sure to send them in if you've got them. All right, let's get started. I'm going to start with you, Jeff, the life sciences expert. I'm going to put you in Dr. Frankenstein's life sciences lab and ask you to create the ideal corporate development officers. What sort of characteristics, qualities would you put in our super CDO?
That's a very good question. I think you need to start with the core deal execution skills. So target identification, valuation, due diligence, structuring, negotiation. But what we've seen is that the CDO also needs to be broader these days. More conscious of strategy, more up on commercial assessment skills, more up on operational assessment as well as part of that. So we've seen sort of an evolution from the core skills that everybody knows about has been implementing to a more broader holistic view of the role of the CDO as well.
Okay. Now, beyond, talk a little bit more about the operational side of it. I mean, I know you said that that's everyone is used to that. At this point, what does that entail? What sort of things are you talking about?
Well, so that's looking at being able to assess if you're on the acquisition side, looking at the supply chain of the target, the technology, the business model. Mm-hmm. And if you're on the divesting side, which is, again, an increasing trend here, that CDOs are getting involved in more and more carve-outs and spin-offs, that's about the operational separation, which can be one of the most complex things that you do around transactions.
Okay. All right. I think if you had added faster than a speeding bullet and leaps tall buildings in a single bound, that would have described everybody at this table. So.
Well, at least the people on each side of me.
Indeed.
There you go. There you go.
Derek,
Perfect.
Does that sort of jibe with your experience and what you see you need?
It does. It does. Absolutely. You know, a couple things that you look to answer, and as you think about a strategy position or a development position, you're answering a couple questions. One, why do you want to do something? So where do you want to go? Why do you want to grow? And really the fundamentals behind that. And generally that'll be led by or facilitated by someone within a strategy function, right? It can be within a business unit or corporate or whatever it might be. Then you move past the answering the question of why, and you move more into the question of how. And how really sets, in a traditional sense, sets up in the corporate development group. And generally that's more technical in nature. So as you think about people that sit within each of those areas, within the strategy side, it's someone that can work across multiple business units, drive a project forward, and really test and challenge what might be internal biases. On the development side, it's more around technical experience. So you'll find a lot of investment bankers, attorneys, deal people leading those types of functions to focus in on the execution. And that's a skill set that you're looking for in the chief development officer.
And Denise, how about you? Are we talking, is this sound familiar to you?
Yeah, it sure does. To follow on what Derek just said, also I think I would add to that sometimes soft skills. So I think that we run cross-functional teams, so we have to bridge someone like from tax to someone from environmental to someone from the operations, because there's the commercial side and then there's sort of what I would call the functional side. So I think it's very important that the organization itself is working as a team, whether the individuals on the team be at the business unit that's sponsoring the acquisition or at headquarters, because first of all you have to make sure the strategy fits, of course, but once the strategy fits, then everyone needs to come together and share the information that they find while they're doing the deal execution.
Mm-hmm. Okay, now a couple of you have talked about the strategy and execution, and EY actually did a report recently and discussed a wide range of these kinds of topics. And well, first, Jeff, could you tell us a little bit about what that report was, so that we can just get that on a...
Sure, we call it the Global Corporate Divestment Study. Sorry, we call it the Global Corporate Development.
We do a lot of reports.
We actually released
it's
that.
It's just the reverse.
Yeah, exactly. And so we talked to about 300 people in various formats, online, in-person interviews, and then roundtable workshops. and ask the whole series of questions about the corporate development officer role, how it's changed over time, how they expect it to change in the future, and the issues that they're dealing with in doing transactions. So you were going to ask about strategy.
Yes, because one of the suggestions in that report was that some companies are at least considering separating the role of chief development officer, chief strategy officer. Is that something that you think is useful? Are there kinds of companies that might benefit from that kind of separation? And where would you draw the lines between the two roles? Who would do what?
So I think what we saw is there's the current state of most companies is that those two roles are separate.
Okay.
And that in some cases they're converging. So some companies have appointed a chief growth officer, which kind of combines the roles of both. Or they might call it a chief portfolio officer, but it's primarily a chief growth officer. And it's nowhere near the majority of companies, but we can point to some good examples of larger and smaller companies in various sectors of industry.
Okay.
So why is that important? Growth is in general a lot tougher to achieve these days. As we all know, that's part of what's driving people toward M&A. So to be able to make the trade-offs between organic growth and inorganic growth, as opposed to having the strategy person responsible for organic growth, the M&A person responsible for implementing inorganic growth via transactions, to put them together in one place makes that trade-off a little bit more holistic and easier to do. So that's one of the reasons. Another is doing strategy requires a good sense of how the capital market's going to evaluate the strategic investments that you make. And so strategy isn't just a qualitative exercise, it has to really be tied to the shareholder value creation. So being able to bring in the skill sets of a CDO, which is kind of the nexus of corporate finance knowledge inside of companies, makes that easier to do as well if you can combine those two skill sets.
Okay. Denise, how do you do it at IT&T?
We separate it.
Oh,
so
okay.
we recently separated the function as far as the front end and the back end. And so basically they actually report up through different leadership team members. So our strategy reports into our CFO and our corporate development reports into our GC. That's new for us. It's working out very well, quite frankly, because we're a small organization. I was thinking about what Jeff just said. I'm a believer that there's not one recipe that fits all. I think you have to take into consideration the size of the organization, the resources in the organization chart itself, and how many business units you have, because I do think that comes into play. We're a small company now. ITT spun about 3.5 years ago, so we're smaller than a lot of people think, and we're less than $3 billion in revenues. So basically, we have the luxury of knowing each other, talking to each other every day. So it's not like there's a lot of places you have to go, you have to call, etc. We can be connected. We don't have to report in even to the same leadership team member.
So implementing that sort of virtual team that you talked about earlier is easier because you know each other, you all sit in the same place, you work together for a long time.
Exactly. So for example, when we're in the execution mode, I work probably 60% with the business personnel and probably 40% with headquarters. Maybe it's 70-30, but clearly a cross-functional team where you have both commercial and functional leads on our weekly drumbeat calls. Mm-hmm. We work together.
And what drove the decision to separate them? You said it's been done fairly recently. So
yeah, some of it was organizational change. Mm-hmm. Some of it was, I would say that was probably the biggest driver.
Organizational change in terms of
internally, yes.
Internally. Mm-hmm. It's still hard to hear people describe ITT as a small company. But we'll have to get past that. How about a Caterpillar? How do you handle that?
Yeah, we keep them separately as well, but they report into the same area. So I'd say we all work pretty closely together. We're a bit on the opposite side in that we're in a bunch of different industries and a fairly broad business. So individual strategies for individual business units, for the most part, reside within those business units. And some of the activities coming out of those strategy reviews could be organic or inorganic activity. And to the extent that it's inorganic activity, usually that involves the CDO group, so the M&A folks. And then we look at it on a corporate level as well. But I'd say the two of them have to, similar to what you have, Denise, is that there has to be a pretty close working relationship between both, because the handoffs aren't clear and intentionally aren't clear. Mm-hmm. And in fact, if you want it to be effective, they shouldn't be clear. You ask a CDO or an M&A professional kind of what is the what's the best strategy, it might tell you it's M&A, right? So you want to make sure you have a pretty robust strategy review to think, is that really the optimal solution or viable path?
Okay. And who's responsible for making sure that that happens? And is there a single person, or is it up to each individual to make sure that they're bought into the program, as it were?
Yeah, you know, we have a corporate governance process in place. So as we look at particularly inorganic activity, we have a governance process in place that we follow that ensures the proper steps are taken, and there's proper buy-in from the individuals that are involved. So it's a standardized process.
Okay. All right. Now, Caterpillar's been a fairly active acquirer over the past 5 years or so. I think your biggest deal was Bucyrus International, almost $9 billion. I know you don't want to talk about individual deals, but can you walk us through a little bit about the approach that your company takes when it's considering a deal that size? Who does what? When do you start to identify a potential target, and what do you think about when you're doing those kinds of things?
Yeah, that's no problem, Jeff. So I think the thought process around it, you might see the deal happens, right? And you think it's almost simultaneously or just happened right then.
Right.
There's a lot of work.
Everybody assumes that a $10 billion deal just springs out of the earth.
Yeah, there's a lot of work, and there's a lot of imaginations that come through the process leading up to it. So there is a fair amount or a significant amount of strategy work that's done up front, including strategy analysis, economic due diligence. There's a lot of work when you look at the potential targets, and that can take years to do, right? That can take years to do. We follow that same process when we look at future opportunities, so run it through the same type of process. And I use the word process because it's important, because it is kind of the spine of how we look at things, and making sure that we look at them in a organized and appropriate fashion.
Okay. And Denise, since the split, which was 2011?
2011, yes.
2011, ITT's been sort of focusing on what we would call sort of middle market deals.
Absolutely.
Below $500 million. Is that process similar to what you go through for those kinds of deals?
It's a very similar process. I keep thinking to myself that we sort of just dropped to zero. But effectively, we have a gated process that I think is probably not dissimilar. One of the things that we do is, in addition to our strategic plan, we have what we call an upfront gate, so that we're all aligned that the space is attractive from a strategic standpoint, because our strategic planning process obviously is an annual process, I think, like most companies, but we just want to keep reminding ourselves. So we have certain gates, like Derek said, you know, you develop your funnel, and my colleague works with our business teams to do that, and then we have monthly reviews with our leadership team, including our CEOs, of, you know, quantity and the ones that are more on the forefront. So if you think about it, if you're running that kind of a process and a transaction becomes available that is not a negotiated transaction but an auction process, you should have already done quite a bit of homework, especially with the internet information available today. So you should have some work done before you get the teaser, quite frankly.
Okay, we're going to talk about auctions a little bit later, I think. Derek, just to get back to you for a second, one of Caterpillar's more recent deals was an investment in Yard Club, a construction equipment rental platform, which wasn't an acquisition, as I understand it. It was more of a growth investment, that kind of thing. What's the process for something? Again, I know you don't want to talk about specific deals, but how do you approach those kinds of investments?
Yeah, and I'd say we approach them maybe a little bit differently, because a lot of times those are early stage investments and generally don't follow a traditional due diligence type approach. So you have to be a little more nimble and a little more creative in how you look at those things. Yard Club, for example, is an opportunity to invest in a company that's coming into our industry. It's a pseudo, you can think of it as an Uber for kind of cat equipment, right? So
exactly.
Now the use of the word Uber maybe is a little far, but has the potential to do those types of things. So for these early stage investments, we look at them differently. They might be an initial investment, a small investment in a company, because one of the ways for them to commercialize their product is through cat product, but the addressable market for that business might be much broader, right? And the aspirations of the management team might be much broader. So we look at those things a little differently and follow a different process when it comes to those. Those are becoming more and more a focal point for us, particularly around data analytics. A lot of that work and those investments spawn out of a business unit's desire to become more connected with the equipment that they sell and a customer's desire to collect more of that information and utilize it.
Okay. And Jeff, I imagine this happens in life sciences too. Just by the nature of the business, I imagine that those kinds of investments are relevant.
Absolutely. The sort of the big data challenge that everybody talks about in life sciences is real-world evidence. So historically, the way drugs have been developed and approved is kind of through the FDA, for example, in the U.S. So you could take 5, 10, 12 years to take a drug all the way from an initial discovery to final approval. But now we're finding that in order to make sure the drug is really effective, really safe, you've got to be following it afterwards. So there's a whole host of data sources that need to be harvested. It can be social media, it can be insurance claims data, et cetera. That has to be fed back into the R&D process. So that's one of the challenges now is how do you integrate all of that, both structured and unstructured data, and then feed it back into the various parts of the whole value chain of the company, but in particular R&D. So that's one of the big sort of big data challenges in life sciences.
All right, let's talk about big data. Well, can we just get a definition so that everyone's clear on what exactly we're talking about? Who wants to take that? Jeff, since you were talking just now.
I'm in the middle. Yeah. So I think it's like a lot of things, like the word strategy. In fact, it's used to mean a lot of different things. But I think what people are talking about is the fact that the availability of information on any given topic has proliferated tremendously over the last several years as a result of digital technologies, communication technologies. And so companies that are on the cutting edge of analyzing that can have a competitive advantage. Okay. And it's some of the examples we use in the CDO study I talked about earlier. One is around an auto company. As part of the due diligence process, people looked at what were customers really valuing in the product? Was it the warranty or was it the price? The seller was talking about how the warranty is really important in driving customer behavior. In fact, based on the big data analytics work that was done, it was really about pricing. Another example is around the food acquisition, where the thesis, weren't quite sure what was really driving buying behavior. Looking at social media, we found out people didn't like the taste of a particular product. So it turned out that the seller had not invested much in product development over the years. So that was a value creation opportunity for the buyer. So those are two examples. There are lots of other areas in which big data gets used. Okay.
And again, going back to the EY report, there was a suggestion that there was a feeling among some CDOs that they really needed more of that kind of skill set. Denise, are you comfortable with where ITT is in terms of big data and analytics?
Yes, I would say clearly that it's something we need to think about. I actually have a meeting tomorrow on it because I'm trying to think, we're not in the consumer business, all right? So I'm trying to think of ways, and maybe Derek, you can provide an example. In a manufacturing business where you can get data, a lot of the transactions that we look at from a size standpoint, the company doesn't have a lot of data. The targets don't have a lot of data. And so I'm very interested, and I'd like to know what maybe some other companies are doing for smaller businesses, how they get that data.
Okay.
I thought you asked Derek.
Absolutely. No, I can answer.
Do you want to jump in?
Yeah, no, absolutely. So for us, a portion of the big data universe is tied to the machines that we sell and the engines that we sell. So harvesting that data in a way that we can then decipher the data and either engineer a better product or provide operational improvements to our customers, whatever it might be to drive kind of incremental value. As we look at smaller transactions, sometimes they're actually bring some type of skill set where they've harvested data off of industries that we operate in and have created algorithms around it to drive value. So we focus in and target on those companies with the idea that you can then take that and expand it more globally. We recently made an investment in an upstart called Uptake. So an upstart called Uptake. With a focus of collecting our data, harmonizing our data, and using that to commercialize it for our customers. Smaller deals, smaller transactions of traditional industrial companies, I'd say that there's an opportunity for people like us that know big data and how to collect it and are in the process of doing that, to bring that to them where they in themselves couldn't do it on their own.
See, we use data for O&M for sure, and for servicing, et cetera, in our products. So what we need to do is take that to the next step from a target standpoint. So that's something we're starting to talk about.
I mean, it's also used, for example, in you're doing sort of emerging markets transactions. If you can use, analytics to figure out what's going on from a transaction point of view, you can sometimes see red flags for, compliance issues, FCPA,
Right.
Foreign Corrupt Practice Act compliance issues. We've seen it around working capital management, where the target, has not been really tracking all of its data properly and making the best use of it around, whether it's around inventory or receivables or payables. And that's also a value creation opportunity in order to manage working capital more efficiently. So there are lots of opportunities, I think.
And that might be a little bit, maybe my definition is a little too broad, because we do working capital analytics, we do certain analytics. I was envisioning, sort of thousands of line items, analysis.
Oh, yeah.
So going back to your point, it's what is the definition of big data?
I think there's a real opportunity with due diligence to leverage that. It's a little tougher as strategic buyers because as a seller, you're less inclined to give them transaction level detail and allow them to utilize that data to make their decisions. But I think the capabilities, consulting firms such as E&Y have to help process that data is pretty significant, and doing it in a very quick time frame, large amounts of data that can be pretty impactful.
Yeah, in our study, we asked people, how the correlation between using analytics and sort of deal satisfaction, and it was dramatic, really, from overall deal quality perspective, from a due diligence efficiency perspective. It was, basically on the order of 50% more satisfaction if you're using analytics across those areas.
Okay. Satisfied?
Absolutely.
Good. Glad we could help.
Thank you.
I wondered if we could talk a little bit about what happens after the deal closes. I mean, it's obviously not the end of a process. Derek, Caterpillar again, after a big acquisition, you start to look and see what you've got and whether what you have fits in with the company.
Yeah.
How involved are you in that, and who else in the company is involved in what EY calls portfolio management of trying to figure out the best mix of what you've got?
Yeah, and I'd say those work streams generally work in parallel. So you're constantly evaluating your portfolio. You're also executing on transactions. At the point of close is really when a lot of the hard work starts, particularly around integration. And that's a strong focus and has been a strong focus for us. And with the integration, the importance of integration and really driving shareholder value is tantamount, right? When you do a deal, it's tied to the ability for you to integrate properly. So what we've done is try to pull integration into the process early. So even when the strategy is being established, you're thinking through what are the key points of integration. So where are the key things that you need to accomplish? How do you want to go to market? What are the key barriers that you have in front of you that you can overcome, even before you might even select the right target, right? And having that as a baseline, and then using the people that are going to be executing on integration in that process to make sure it's as seamless as possible.
So you have to be thinking several steps down the road at every point in time.
Yeah, and sometimes you do a great job at it, and sometimes you don't. I mean, there's things that you don't know when you do an acquisition that just pop up, right? That happens on every transaction. But with advanced planning, you hope to minimize the number of things that do pop up. And I think the big structural things that you make a decision on, where how are you going to go to market and how are you going to distribute product, those decisions happen, or those conversations happen up front. So before you respond to a teaser, before you go after a deal, you're pretty methodical on how you're going to do it. And we all operate within a deal environment, and we know that the timelines can be very condensed. So in order for you to participate in a condensed process, you need to have that work done up front.
Yeah, and as target prices rise, I mean, we've all seen the sort of increase in M&A activity that's causing, at least in my sector, the prices of desirable targets are rising pretty dramatically, and so that means that you're paying a higher price, which means I think that the synergies that you map out have to be really rigorously done and then followed up on in order to achieve that value. Shareholders aren't going to be happy with you long term.
And Denise, at ITT, how does that role play out when
From an integration standpoint, yeah, we actually start talking about the integration team when we put in a non-binding bid. We start thinking about the team members at that point. We also, obviously start thinking about engaging a leader for the integration when we start doing due diligence, but sometimes we're not successful in doing that. That's what our goal is. The other goal that we have is we find it's very beneficial not to lose the experience and the knowledge. So the team that's doing the due diligence will also do the integration. So we find that very effective and something that we are constantly looking at. So we're actually going through our existing process this year, coincidentally, and we're taking a look at is there something that we can do better and different. We do have, I think most companies have, the must-haves day one. For example, you mentioned FCPA training, things like that. The 30-day, 60-day, 90-day, 180-day reviews. I think everyone does that. There was a notation in here about a couple years later. I think it's really important to keep looking at it. Eventually, if you really get those synergies, like what we used to be hearing was 3%, right? And now we're hearing 8%. That's a lot. Mm-hmm. So to get those, you have this conflict because you want to lose sight of the organization that you bought in order to get the synergies, but at the same time, you need to, for quite some time, our process was 2 years plus stub, to keep tracking to make sure that the investment returns are there. So you do have that fine balance of realizing the synergies and integrating the business with making sure that you don't, after 6 months, for example, stop watching it.
Okay. You mentioned synergies. One of the things that we used to hear about all the time in our coverage was the problems of integrating cultures, and we don't really see that much anymore. We don't hear that much about it. Are we missing it, or is that something that you folks have gotten better at over the years, sussing that out ahead of time? Derek,
I think there's. I don't think it's changed, right? I think there's still cultural issues, and maybe it's just not as prevalent as what it has been. Okay. Most companies are becoming more global, so they have a lot of local leadership that helps break down some of those walls that maybe were there before, or cultural differences that were there before. I think the culture, the definition of culture has changed a bit, where it's no longer a geographic culture. So whether we do a deal in Japan or whatever, so India, let's say, it's a lot of the culture is also contingent on how you do business. Mm-hmm. So what are your processes that you have in place? What's your risk tolerance? How do you develop new product, right? So those types of things are also very important as you assess culture. So is the target following the same type of process? And if not, will you try to preserve it or will you try to change it? And sometimes that change can be pretty painful. And it doesn't necessarily have to come just because you've done a deal that's in another geography. Mm-hmm.
And Jeff, in life sciences, how is that working these days?
Yeah, just building on Derek's good points, I think that what we've seen is that people are building the cultural assessment in like they do. They used to do financial and tax and operational issues. It's more core to the evaluation process, right? Diligence as well as integration, thinking through change management. If the target's culture is a little different, how are we going to move that along and get that more aligned with ours? Or maybe there's some good things in their culture that we want to move ours toward. So I think the other answer to your question, I think people have learned, people have gotten more systematic. There's been more of a Six Sigma process, continuous improvement applied, and culture's been an area. I think also, though, more deals have been done in the core. Companies haven't been as adventurous in the last few years as they had been in the past. This notion of adjacencies or transformative acquisitions outside your core area of operations. So I think that's made cultural assimilation a bit easier too. We see the same thing in life sciences. It's a big pharma company buying a little entrepreneurial biotech company. People have learned a little bit more how not to crush the biotech with all the big corporate practices.
Mm-hmm. Okay, Denise, did you want to add to that, or?
Yeah, I was thinking when I first listened to you, I was thinking of the latter, that we sort of have just folded culture in. I'll say that at ITT we have a large across-the-board culture initiative down to the plant floor today. So we're taking another special look. I think it's because of that. because when we look at it, we say it's not just the what, it's also the how from doing things, execution. And that does not only apply to corporate development. So from that standpoint, I do agree that people are, it is forefront of mind. I also agree, I think Derek said it earlier in my career, we did an international program, and what we found was amazing. It was that geographies didn't make as much of a difference as functions did, because, for example, I'll pick on an engineer. An engineer working in Germany or the U.S., sort of, and that's categorizing people, but they had less differences, right, than maybe someone that's, I'll make it up, communications. So it was a very interesting exercise for us that we went through. Obviously, it's stale. It'd be interesting to see today because, as Derek says, companies are very, very international. And so I don't think companies, when they look at their acquisition execution for capital allocation, I'm not so sure they look at it from a regional standpoint unless they're filling a gap, a regional gap, strategically. I don't think of, at least we don't think, well, we want to be in this country or we don't want to be in that country.
Now, Jeff, you alluded to yet another title, I think, a few minutes ago, the Chief Growth Officer. And again, in going back to your firm's report, the suggestion was that the appointment of a Chief Growth Officer or a Chief Portfolio Officer might be the next step in the development of these kinds of roles. Can you just explain a little bit about what those roles are and what the thinking is there?
Right. Part of this comes out of one of the key sort of results of the study, which is that we asked people, what's the biggest change that's happening in the corporate development function? And 44% of the people said an increase in strategic focus. So there are a whole bunch of other results that sort of come around that, but it's the fact that the corporate development function, it needs to be more embedded in strategy. It can be separate but connected the way Derek and Denise have talked about it. Or there could be sort of a conscious effort made organizationally to put the two roles together, to combine the sort of M&A, corporate development skills and processes with the more strategy processes. Some companies have done this. A big company in my sector is Merck, in which there's one person that has the role of Chief Strategy Officer and Chief Corporate Development Officer. As a real, in order to do some of the things that we've talked about, we're in a growth challenge environment generally across industries. How do you get the growth? Let's make that paramount in this person's mandate of what they work on, make them agnostic about organic versus inorganic growth, about how resources and capital is allocated among those various attempts to grow the company.
Okay. And Denise, what do you think of that idea? Is it something that might be useful to create those kinds of roles, or do they exist? I assume they exist in some level in your organization, but making that distinction, is that something that you think might be useful?
Yeah, as I was thinking about it, it's interesting because some people, just by their nature, are out talking to customers, talking to suppliers. They're thinking about how they can grow all the time. And so do you need to take that individual and put them in a growth special role? I think it depends on how many industries are involved, how many products you have. So as I think about it, if the focus isn't there and the resources aren't applied, clearly I think it's a great idea. I think that there are other ways for a business unit president. A lot of times business unit presidents are just very strategic in their thinking. So if you have someone like that, I don't know if they need to be mirrored with a growth officer, but honestly, as I was sitting here, in some businesses, I think it would be very helpful. So again, I know I probably sound like I'm totally flexible, but I do think that you have to think about the organization and the effectiveness of the people in their current roles.
Yeah, I think that was a point you made at the start, really. It really depends on the organization, depends on the industry, depends on the skill sets that are already in-house and how people work together. So it seems very reasonable to me.
And Derek, how do you feel about that? What's your reaction to what you're hearing?
I think it's a pretty cool title,
actually.
actually.
It does. So. Growth officer sounds great.
No, but I would say,
Oh,
as you think about it, it's the people that do the strategy function, the corporate development function, to the extent that you're not able to address the growth opportunities that sit in front of you, absolutely, and it should be a beef up of that organization. I think that's helpful. Our business units kind of have corporate development people within them that are essentially chief growth officers for those business lines. But at a corporate level, it could make sense as well.
Yeah, I mean, I have a corporate finance bias because that's my background, but I see a lot of strategy being done in too qualitative a way. I mean, I'll give you an example. This is from a portfolio management perspective, so more on the divesting side is, if you're the chief strategy officer and you're not aware of what assets are trading at very high prices, so there's somebody out there willing to pay a lot for one of your business units, that effectively makes it worth more to your shareholders if you sell it than if you keep it, you're not going to be making the right strategic choices going forward. So by combining, again, it doesn't necessarily have to be the same role, but by getting those two groups closer together, you sort of imbue the strategic choices or consideration of strategic alternatives with more of a capital markets perspective, which I think is all good.
Okay. And what about the use? I'm sorry, were you going to say something? No. What about the use of M&A committees? Is that something that either of you do? Is that something that might be useful, or is it just another level of bureaucracy? How do you handle that?
Yeah, we absolutely do.
You do.
And
okay.
It's dependent on the size of the transaction. So
okay.
we have certain gates that we go through, but absolutely it's helpful. And I think the couple phases that you go through, initially you look at it like Denise was talking about. You look at it just strategically, does it make sense? So does it fit within your strategy? At that point, it's before you know a lot about the company or before you maybe even get into due diligence. Is this strategically an area that we want to go into, and do we want to invest time and money and resources in exploring it? And so you get past that phase, and then you get into due diligence, and then before you sign on an agreement that could be binding, there's another gate review at that point where you talk about the deal and you determine, based on what we've learned since the last time we've spoken, do we want to move forward?
Okay. And Denise, how about at ITT?
We don't have an official committee, but we have an effective process, I believe, because, as I mentioned, we're smaller and we have several touch points. So we have a monthly meeting with our leadership team, and then our gated process we have, before we put in a non-binding bid, we meet with our leadership team. So that's effectively our committee. And then, of course, at the end of the process, before we sign a contract, of course, we meet with our leadership team, and if the board is required, of course, they approve it. So we have a few touch points along the way with our leadership team. So it's not a formal committee, but it operates the same way.
And Jeff, you started to laugh when I asked the question. What was your reaction to that?
Well, it's interesting. It's surprising that both Derek and Denise talked about sort of effectively having one, because in the study, again, less than a third of the respondents did have a formal M&A committee. But the flip side of that is that the people that did, that correlated with more than twice the satisfaction with their deals, overall satisfaction with their deals. So it's kind of a, and the practice varies around the world. In EMEA, almost half of the people that we talked to had a committee. In the U.S., less than 20% did. So it's clearly one of those kind of evolving, not uniformly employed practices yet, but it does seem to be effective.
Okay. Again, drawing on some of our coverage at the deal, using of activist investing, activist investors like to think that they're pretty good portfolio managers for companies that even that they're not involved in. Do you all have a process in place for either anticipating an activist campaign, or at least sort of planning for one? I mean, is that something you think about in advance? Derek?
Yeah, absolutely.
Okay.
I mean, it's part of corporate governance. So any companies, particularly of a certain size, you go through a process to review those types of things.
So you're looking at are you asking yourself the same kinds of questions an activist might? Is that the...
Yeah, exactly.
Okay.
Yeah. Yep,
and Denise,
absolutely.
how do you...
Yeah, we're also a public company, so like Derek commented, I think it's also part of our corporate governance, and it's something that I know people can't ignore anymore.
Okay. And if I could just throw in a comment, I think that was encouraging to hear, because I have to be careful, because we serve a lot more corporations than we do shareholder activists, but it seems to me the questions that they're asking, the analyses that they're doing, at least the more constructively oriented activists, are the same kinds of questions about how you optimize shareholder value that management teams should be asking themselves. So it's not really surprising to hear that both ITT and Caterpillar are thinking along those same lines too, because it ultimately gets down to, what's the most compelling story and plan for creating value for your shareholders. Okay. That's what wins the day in the end.
Right, and we mentioned auctions before. I wanted to get back to that a little bit. One of the most significant developments we've seen in auctions is strategic buyers doing much better in auctions than private equity firms, even though we keep hearing about all the dry powder that buyout firms have sitting on the sidelines, and the fact that lending is that it's easy for them to borrow, cheap for them to borrow money, and yet it's still they're losing out. What are you doing well that's causing the private equity firms not to be able to have the same kind of success that they used to have in auctions? Is it simply structural that the equity prices are so high that they can't deal with it anymore, or are strategic buyers doing a better job of due diligence, of making sure they know what they're getting into, where they can go? Explain give us a sense for what that phenomenon might be.
Yeah, I guess, Jeff, a piece of that is truly the fact that, the cost of capital is essentially lower than what it has been in the past, so it allows you to do things that you wouldn't have maybe normally been able to do in the past. But I think it goes back to what we talked about before, in the fact that companies are realizing, corporates are realizing, that you do need to do quite a bit of strategy work up front. You need to prepare for the integration at the back end. So when you do go through an auction-like process, you can set yourself up for success, right? And you get yourself the ability to execute on a transaction to the extent that that's something you want to go forward with, and you have the strategy in place, and you have the integration plan outlined. Okay.
And in life sciences, again, private equity firms, I'm thinking actually particularly in startups, it used to be that they would win all the time. Now they're not. Particularly drug companies are looking for the smaller companies to add to their pipelines.
Yeah, I mean, PE is focused in the life sciences sector on the less R&D intensive segments of the sector. So it could be med tech, for example, has been kind of a hotbed and a growing area for PE activity. And the more R&D intensive areas, not so much, because the cash flows aren't as predictable. They're more volatile. But I think in general, to the extent that more of M&A in the last few years, that where corporates are winning, strategics are winning more, has been in their core areas. There where the synergy plays can be fairly dramatic, and the PE can't compete on that basis. PE competes on operational improvement. They compete to some extent on capital structure, although that's not as valuable anymore. So if it's a competition between a PE creating operational improvements or other kinds of improvements versus a corporate who really knows the area and has the platform to leverage, it's not surprising that they're winning more than private equity is.
And Denise, do you have any experience with private equity firms and how they do business?
Yeah, more on the sell side.
Okay.
What I would say is I totally agree with Jeff, because if it's strategic, 1 + 1 needs to equal 3. So effectively, unless they're a hybrid and they have something in their portfolio where they're building out a platform, I do think it's more difficult for them to find synergies and to share those synergies in the price.
Okay. Again, going back to some of the findings in the report, one of the things that struck me was a difference, and maybe I'm not characterizing properly, about how you measure the success of a chief development officer, corporate development officer, or corporate strategy officer. Is there a best way to do that, or are companies all over the lot in terms of how you do that? I know there are several different models. If you could just take us through a couple of them.
It's more the latter. It's really diffuse, the practice. What we found was some of the top team measures went to things like pipeline quality, strategic fit of the deals, ROI of completed deals, but those only registered in kind of the high 40%, low to high 40% range among the participants. So part of it is it's a complex thing to manage. So for example, if you were to goal people in corporate development on the number of deals that they did, that can encourage people to do the wrong kinds of deals. And yet, how do you give somebody high marks for not doing a deal? That's got to be a pretty much a qualitative analysis as well. So it really relies, and then we go back to something that Denise talked about a couple of times, is the corporate development officer tends to be the project manager, or to use a sports analogy, the quarterback of a virtual team, a lot of whom have day jobs as opposed to doing deals all the time. So how well that job gets done, how well they manage that team, it has to be assessed in some part qualitatively as well. There's almost a peer review component to it too. So I'd be curious as to how each of the CDOs
yes,
do
indeed. Denise, can you tell us what is success? What makes a good CDO?
Deploying capital in the right way. And it takes a while, in my view, it takes a while actually to know if you've deployed it in the right way, because you're not going to know in the first 60 days, 90 days. So we have targets for capital allocation, but it's dangerous, as Jeff says, to have too much emphasis on those numbers, because you don't want to encourage a bad deal, or you don't want to feel like you must do a deal. It needs to be strategic. It needs to have financial returns. We do track financial returns, of course, like we're a U.S. public company, we need to. And like I mentioned earlier, up in the earlier processes, we track how many items or how many targets are in the funnel, how many are in active cultivation. I think those types of measurements, how many LOIs or non-binding bids have we executed, so we track all of those, and I think those are important. And as a follow-on, I think something that we are trying to improve on right now is we've always done lessons learned on due diligence, lessons learned on integration, but lessons learned on some of those steps along the way. So that's something that we're talking about right now.
Okay. And Derek, what's success?
Yeah, I mean, that's consistent the way we look at it as well. I mean, the corporate development office or the M&A function is tasked with taking an enterprise perspective. So in order to take an enterprise perspective, you have to feel like you're not incentivized to do certain things. That you might have a business unit that wants to do something, and from an enterprise perspective, it doesn't make as much sense. So we align ourselves with corporate metrics that we track for performance, but we do look at deal activity and ensure that we have a robust pipeline and are at certain stages in the process as well. So very consistent with the way Denise looks at it.
Okay. I think we do have a question from the audience. Is that right? Okay. The question is about the structure and size of your corporate development organizations. What levels of experience do you try to recruit, and where do you source talent?
So, you want me to go?
Oh, go ahead.
Yeah, okay. So, within our group of corporate development or M&A, we call it strategic investments. We have 15, 16 people in that group, some of which are in the U.S., some of which are in Asia. Generally, we'll hire in the people that are leading each individual transaction will be hired in as former investment bankers or private equity individuals, or have a technical background in M&A, and they'll lead those projects on behalf of whichever business unit that might be looking at it. So we're always actively recruiting people into that group.
Okay. And Denise?
So I guess as I think about it, it goes back to what's the definition of corporate development, okay? So I'll just explain how we're set up a little bit. We mentioned that it has to fit the strategy. So we link our strategic planning with our financial planning, FP&A. We also link that with our IMS, our ITT management system, because they have councils for technology, for example. So if you think about our organization, we don't have very many people in corporate development that are we've got myself in corporate development that reports into the GC. We have, I have a colleague on the front end for the focus is the pipeline, and he reports into the CFO. And then in our businesses, what we did is we don't put corporate development, we call them business development professionals. They're focused on the front end with the strategy, but we work with them closely during the execution. So we don't, if we counted at the businesses, maybe 1 per 4 business, I'm thinking 2 people at headquarters, that's really what we have. But the people at the business unit, they may do other things as well, like they might be responsible for, I know one is responsible for communications for that business unit. So because of our size, our numbers are smaller, but also our real teams, when we pull together a team, we'll have 25 people. and maybe only one of them or two of them are full-time corporate development employees.
So I'm curious about the elements of the virtual team. So when you need functional expertise, whether it's HR or tax or other areas that again, people have day jobs and you need them to work on your deals. How does that work? How does that relationship work? And so that you're making sure that you're getting their attention and they stay with you throughout the deal process?
Yeah, so whether it's, let's say, HR or an element of legal or wherever it might be, part of their job is to be an SME for due diligence or for an acquisition. So they're tasked with that as part of their daily responsibility. So as we look at a new target or they're managing multiple things, they might look at and be our subject matter expert for a particular topic. And we have that across different functional areas within the organization. So back to Denise's point, I mean, if you added up everyone that gets involved in a process, you probably wouldn't want to know what the number is. But we do have people that come in at functional levels, and that's depending on the involvement of a particular functional area, HR or some of the legal elements. It might actually be a full-time job for someone, right?
Because I'm concerned sometimes about how do you ensure that those people also have enough transaction savvy to be useful, because they're not doing it all the time. But it's a full-time job, yeah. It's easier. And then how do you, does their boss check in with you for their annual performance review to see how they're doing from your perspective?
Yeah, absolutely. So it's, we ensure or try to ensure when there's a handoff from, because people hopefully advance in their career and move on to other positions, when they relinquish their duty as the SME for their particular area, they've trained who's going to replace them as part of that process, and they're part of the team. They participate in the update calls. I mean, they are part of the M&A group. Some areas you need more technical training to do M&A, and a lot of the work that they do is tied to due diligence, and to the extent that we might not feel like we have the best capabilities in that area, we'll bring in the right people that do, externally or internally.
Denise, did you want to add anything to that?
Yeah, one of the things we do is if we have a business that hasn't done a lot of acquisitions, we go out with a core team, with legal, with corporate development, and we do training in the field with them. And we also put together, we call it it's a roles and responsibilities chart, accountability chart. And so if there are teams that don't have a lot of experience, I think that's something that the corporate development professional such as myself has to do. You recognize where you need to take a little more time with those individuals based on past deals, because I think the corporate development professional is sort of like, has to know something about everything, but also be smart enough to know that they have to rely on the subject matter experts, right, for the
Exactly.
details.
Yeah.
But you have to anticipate what people should be looking out for if it's their first acquisition, for example. But a lot of our functions, we work we have a matrix organization. So like in the case of HR, benefits are handled centrally. So our business HR leader will be supported by someone for benefits. We have someone centrally for comp. So there are little sub-teams, which I'm sure, Derek, you must have at Caterpillar as well. I call them little sub-teams.
Yep, that's exactly
And
right.
they work.
All right, and we have a budget question. Do you set aside a budget for these various strategy targets for acquisitions, joint venture, and other collaborative activities? Derek?
Yeah, I'll go first. So yes, the answer is yes.
Okay.
So as part of our capital allocation process and resource allocation process each year, we set aside money tied to growth, and part of that growth is tied to M&A.
Okay.
Yeah.
And Denise?
And we also have a capital allocation process, and there is a number, we obviously know what our capacity is. We tie it into all types of allocation of capital, whether it's inorganic growth, share buyback, whatever, but we all know what that mix is.
Mm-hmm.
Okay. We're getting a little toward the end, so I did want to talk a little bit about the future. I'm interested in getting your views of what you think are the biggest issues you're going to be facing over the next 5 years. Presumably, you're thinking about those things. Denise, what keeps you up at night when you think about your position at ITT and what's happening in the world now, whether it's geopolitical, whether it's economic, anything? What do you really think about when you're worried about about what today is going to bring?
Yeah, well, we always know that there will be change.
Okay.
and obviously technology is an important factor, whether it be how you execute or even in the products, whatever. The thing I always think about is how can we differentiate ourselves? Because in today's environment, since there is so much capital out there like we discussed, you know, how do you get through the work and have the right balance, not being risk averse, but at the same time highlight the things that are too risky? So, so how do you balance that with being first and having a contract that is also balanced? Because it's really, at the end of the day, the way I look at it is you want to win if it's the right asset. You want to have, obviously you have to have a decent price or the best price. You also have to have the best contract probably, because it's price and contract. And then what do you offer for the people? Because I had this thought earlier, we talked a little bit, because we do see on the buy side where the seller is a private equity today. Private equity, some people would think, well, they don't care, they only care about the dollars, but actually they also, what I find is they do care about their team in a lot of cases, or most cases. And so, you know, what can you bring to the party for that team? How can they grow? They're going to be your future employees.
And Derek?
Yeah, I would
say
same thing as Denise. I think it's spot on. A couple things as we think about our group. We're tasked with facilitating growth, so finding opportunities to grow and making sure that we're targeting those types of things, and it's tied to a strategy. The second piece is process. So making sure that we've done the strategic work up front, like I talked about before, and the integration work prior to launching into a transaction is very important. I think if we can get both those things right, it's going to set itself up for success. Also, that one of the key things is bringing in and attracting and recruiting the right people to work within those organizations is important. It all comes down to people and decisions and experience that they have. And if you have the good team with the processes in place, you give yourself a better than likely chance of success.
And Jeff, what should they be worrying about?
Well, I think we all worry about a lot of things. I think the world seems to have gotten more complex. The pace of change is faster. Some specific things. You know, what happens when liftoff finally happens in the U.S. Fed, right? When interest rates start to go up, and so everybody has gotten very comfortable for the last several years with very low interest rates. What happens when those go to more normal levels? There's still a multi-speed, global economy, the U.S. versus Europe, and we all know about the Eurozone stresses, of various types. What happens with China's growth rate? That drives a lot of things like commodity prices, which are important to a lot of different people. I think we'll see continued escalation of shareholder scrutiny. You talked about shareholder activists, but I think in general, even traditionally passive institutional investors are getting more active and becoming more vocal about how capital should be allocated. So I think we're going to see that continue to be a factor going forward, whether it's via shareholder activism, which seems to be a trend that's here to stay. They seem to be a force to be reckoned with given the amount of money that's put into those funds and the amount of influence they're able to exert and bringing along of the passive institutional investors. I think that's a big force to be reckoned with as well. So it's just basically getting a little bit more complicated, as each day passes.
Okay.
From all the different things that you mentioned, from the capital markets, from geopolitics, from economics.
Okay, and we heard a lot about over the years confidence. How confident are you about the U.S. economy, the global economy? I mean, do you share the general sense of not an increase in confidence, but at least a comfort level with the way the economy is?
Yeah, I think depends on who you ask.
Okay,
right? But I would
I'm
say,
asking you.
yeah, exactly. I'd say there's more that we can do, and particularly when you look at some of our end markets, the Caterpillar end markets, there are more investments that are required in infrastructure which will drive the consumption or use of our equipment. And I think that's an area we've been, as a company, have been fairly vocal about, and that we think that that's something that's necessary.
Okay. And Denise, confident?
We feel confident. I will say that, in some end markets, we're looking at it a little bit carefully, but absolutely overall confident.
Okay. And Jeff, I'll give you the last word.
Well, I guess if I were in the audience, maybe a takeaway or two. I think we've talked about a lot of trends, a lot of great practices here, But from our perspective, we see the corporate development function becoming increasingly central to driving growth, which means that the skills have to be not just upgraded, but maybe expanded. You can manage a virtual team, but what we see, at least in some cases, is an insourcing of more of these knowledge and skill sets. And a guy named William Gibson a few years ago said that the future is already here, it's just not evenly distributed. So I think we're seeing there's a few early adopters of this sort of chief strategy officer concept, if not approach in detail, and we expect to see more of that going forward.
Okay, well, I think we'll leave it there. Derek York from Caterpillar,
Thank
Jeff
you.
Green from EY, Denise Brower from ITT, thank you for coming in today and sharing your insights, and thank you for watching. In New York, this is Jeff Kanige for The Deal.